from options to futures. Let's get into it. Taking the opinion out of trading. You had a great talk with our mutual friend, Peter Momat, earlier this week about trading futures in the same vein as trading options, not necessarily needing an opinion. A lot of people find a hard time jumping into markets like we're looking at today, which is metals, because they think like, oh, if I'm going to trade gold, then I need to know gold. Like I need to be in a mine somewhere and digging gold up and know everything about it if I want to trade gold. But the nice thing about trading is, well, first of all, you probably actually know a lot more about gold than you do AMC Theaters, the company. And so that's one point. But at the end of the day, Jermal, you can trade neutral strategies. Like you can trade things that you can trade in a way that doesn't make you stick your neck out and be like, this thing is going higher by a lot and I'm buying it, or this thing's going lower by a lot and I'm shorting it, akin to option strategies like the strangle and iron condor, where it's like, I don't think this thing is going anywhere and I want to make money off of that, right?
Right. Absolutely. I mean, this is something that I'm very familiar with, especially, when I worked at a trading firm. That was probably when I first learned that idea. Prior to that, when I was interested in stocks and I was just kind of trading stocks on my own, I felt like I needed to know all these things about a company. And then you get to a firm where you're trading, 50 or 100 or 200 different names. You don't have time to learn every single thing about the company. You just need to know about the volatility. And so that was my first introduction to that. So coming into something like this, I mean, first of all, like we said, and like I learned yesterday about Spree, gold is more than 50% of it, but there's a bunch of different metals in here, or three total metals, right? And so as a result, you're not going to be able to know everything about what's going on with all those metals at the same time. And with metals too, there's a lot of geopolitical stuff from time to time, so it's hard to really keep up. I think this is great to be able to trade a range. If you're aware of the range, I mean, that's the best way that I would look at this situation and trade it.
Well, you nailed something there, which is like a lot of people, and I remember this when I was making my jump from not the leap from options to futures, but the leap from college or just like theoretical studying or education to practical trading. You always think like, oh, like they're going to ask me questions about like, I started out in interest rates. They're like, oh, they're going to ask me about the Fed and, what the dot plot says and what the hawkish rhetoric, who the hawkish Fed chair people are and who the dovish Fed chair people are. They're going to ask me all these questions. And then when you get there, they're just like, this is how much this product moves. This is how much, would be a big move. When you see a big move, this is what you do. When you see a small move, this is what you do. It's more just gaining context on how the market moves more than anything. And I remember my buddy who went into pro trading and options, he still actually is over at Morgan Stanley. And it was the same thing with him. We studied math together and we're thinking like, he's like, oh, I'm going to need to know everything about these stocks. And he gets there and they're like, listen, you're managing a volatility, a portfolio of variance swaps on hundreds of stocks. And we don't think you need to know a single thing about the companies themselves. All you need to know is this is how volatile it's been. This is the average volatility. When it gets up here, we're selling volatility. When it gets down here, we're buying volatility. I mean, it's the same as, and this is what's been great about Tasty Trade and so many other vehicles in, the 2010s and 2021 here. IV Rank does exactly that for the everyday person. Like you can now do what the pros do as an everyday trader, whereas it used to be like, this is how standard deviations work. This is how volatility works. It's the same thing here. Like those pro traders, Jermal, aren't having opinions on where gold is going. Like that's their side portfolio, right?
Yeah, that's their side portfolio. I mean, maybe once in a blue, and it depends, right? It depends on the type of fund or something like that. Like they may just be a long only fund and they look for situations where they want to purchase, 10,000 calls in gold or whatever, or get long, gold futures or something like that. It just really depends on your setup. But I think, for the purposes of what we're talking about, it is possible to trade without having an opinion in this type of situation. Just looking at the optics, trading that way, I think is kind of what we're getting at here.
And now I'm going to totally flip on all the things we just talked about and ask you for your opinion. No, I'm just going to ask you. This is kind of like, I like to do this every once in a while on the show, kind of like a Rorschach test of sorts here, where it's just like, I'm going to pose you the context, and your response, whether you want to buy or sell, is going to say a lot about you, but also should dictate your trading going forward here in all markets. So with that being said, since 2010, gold has been above $1,900 just 2.4% of trading days, currently above $1,900 as we speak. Buy or sell? What is your opinion of that?
I would say sell for a trade. And again, when I say it like that, you know exactly what I mean, but just so everybody else understands, I would sell for a trade in that I would pay attention to the levels that I sold it at, and I pay attention to the levels that it go up to or down to, that way, because specifically with something like gold, because of the way that it can move at times.
Yeah. And so here's the thing, like we just talked about how you don't need an opinion to trade and blah, blah, blah. That is the only opinion that I needed from my friend here. And now going forward, he isn't going to have to make opinionated decisions on a daily basis in futures. And so what we just ironed out is that Jermal is more of a contrarian. When you see something that is like, hey, this happens 2.4% of the time, you're like, sell, 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 sell. I want to get on the other side of that. You're the guy who's like, hey, this plucky team who was, 20-1 to make it to the playoffs, made it to the playoffs. And everyone's like, ooh, I'm going to bet on them to win the championship. You're the guy who's like, they aren't going to win the championship. Like, right. Cinderella stories happen once every couple of decades. Gold gets above 1900 a handful of days. This is a chart. Look at this x-axis. From the late 80s until now, gold has been at these levels a handful of days, and thus you're looking to get on the short side of that. And with that being said, it makes everything kind of clear from here on out. When you see an extreme to the upside, you're looking at selling it. When you see an extreme to the downside, a lot of people, for instance, buying energy stocks over the last couple of years as they just tank. And now that market is coming back, it works both ways. But once you iron out that one kind of like mentality, I wouldn't even call it an opinion, it makes everything so much easier, because opinions and emotions go hand in hand. And maybe you can give a little bit of context to that. Like when you're trading actively, when you're professionally trading, you don't want opinions and emotions. You want like levels and mechanics, right? Like, am I wrong there?
No, I agree. I mean, you want levels and mechanics. You want to be able to know, where's a good point that I would, or reasonable point to get out or close out a position, or where's a reasonable point to get in. Like we just said, like right here, I felt with when we talked about gold, with that example, it's reasonable to sell because 2.4% of the time over the past 10 years, it's been above that level. So that's why I'd be interested in selling. Now, if it all of a sudden went, 2 to 3%, maybe I'd probably consider closing the position and reassessing, right? Like I wouldn't add more, that's for sure. Like I would just that's something that I have to make that opinion, or I shouldn't say, I should make that decision before I put the trade on. I think it's key to have that before and not during, because then that during leads to emotions, I feel.
That's exactly right. Like, and this is, so we set it up here, a short spree trade, looking at plus or minus like $100. You can move that around, but that's about an average day. Like if you think that gold and silver are going to fall for the next few days, you could look for $200 or $300. But a very standard setup here in small futures, which is, okay, this thing is at a point where it's only at 2.4% of the time. I'm going to get on the other side of it by selling, looking for $100. And that is so key, what you just said, because if you go into it, it's just like, I'm going to feel this out. Like, we'll see what happens, Then if gold does get to that range where it's like a new all-time high, which we did see last year, and it came back significantly. But when you get up there, and if you don't have mechanics or a plan, it's like, I'm out $1,000 and I don't know where the hell anything is going. I don't know what the hell I'm doing. So totally essential to set those mechanics beforehand, because you don't want emotions. You don't want to be there talking yourself into this position that's hundreds or thousands of dollars against you.
Yeah, and it can happen. I mean, I've certainly made that mistake before, but it's emotions, right? And I always feel like being able to handle those emotions around trading is key, because once you have those mechanics that you're paying attention to or you're focused on, it takes those emotions out of it. I mean, and this actually works in a lot of different things in life, but nowhere better than trading.